and it's had a fairly lukewarm listing. The stock is currently down close to about 4.5%, so it's trading below its issue price. So it's made a bit of a muted debut. Remember, the overall offer included an offer for sale of 545 crore rupees, and the company plans to use the proceeds for debt reduction and funding the working capital needs. We're now inviting the company's chairman and managing director, Mr. Kunhamed Bicha, and also their chief investment officer, Mr. R.M. Subramanian, on the show now. Gentlemen, thank you very much for joining in. Mr. Bicha, now, I remember our last conversation when we were talking about, utilization levels, and you had said the utilization levels were at 60 to 65%, but you stayed shy of giving us some numbers, the guidance for FY24 and the long-term picture. Now that you are listed, can you share some numbers? What could be the growth rate for you in FY24 and the margins you're likely to command next year, and even some longer-term picture? Where are the margins headed?
So we were looking at it a lot from a longer three-year horizon. What we see immediately is that we will be growing faster than the industry. And since we're just listed, we cannot give the exact numbers out. Our anticipation is going to be faster than industry. We're seeing the orders come in from that. And the margin situation also is very, very healthy. As you very well know, we are in the teens, and that can possibly go up into the future. But we're excited about the journey forward. And today we are with the new stakeholders and new shareholders, where we are going to make it happen for all of them.
What's the industry growing at?
Into our group.
What's the industry growing at?
30 plus.
30 plus, and you will grow faster than that.
We anticipate to do that.
Yeah, got it.
Mr. Bicha, a question more on the holding structure, because in this OFS, promoters are diluting quite a bit of their holding. Promoters are big sellers. If I have the numbers right, I think post-listing, the promoter shareholding is coming down from about 70.7 to now 51.24. What's the intent? Will promoters look to maintain their holding at this level of around 50-51%? Would you want to go back in over the next couple of months and years?
So just to give you a feel on that, it's been a 20-year-old bootstrapped company. I mean, there's no PE or there's no other investments which has come in apart from friends and family. And we intend to keep our 51% and go larger. And the key goal was to give as much as possible as a percentage to the new stakeholders. And that's one of the reasons why the promoters reduced. And some of the other shareholders have reduced much more than what the promoters have done.
Sure. So you mentioned that, sorry, I didn't quite follow that. Medium-term intent, I'm not asking tomorrow, but let's say over the next 3 to 4, 5 years, okay, where would promoters want to see their holding in the company?
And 50 plus, for sure, what it stands today, and we may even increase it as we go forward.
Mr. Subramanian, what are the investments that you are making in the company to make sure that you continue to remain competitive, grow faster than the industry? Do you have any tech spends which you have outlined, and what would your budgets look like as a percentage of your overall revenues?
Yeah, in terms of the IPO, and the primary purpose of the IPO is to make sure our growth is fully funded. You all know that the manufacturing sector and EMS is seeing a huge growth momentum because of the industry tailwinds as well. So the idea of the purpose of the IPO is to make sure the growth is fully funded. Bulk of the money will be going in debt reduction. We intend to maintain the working capital lines, and then as we grow forward, we will re-leverage going forward. So today the cash what we raised will be used in debt reduction, maintain the balance sheet healthy, and move forward. So that's the primary purpose of the IPO, and we believe with the current capital raise, we are well covered for the 3 years in terms of ensuring the growth is fully funded.
Okay. Give us a sense, while of course you're not giving specific numbers, if I look at the revenue profile, then 642 crores in FY20 to about 841 crores. You're saying you're going to grow ahead of industry. What are the main levers at hand? Which are the business segments from where you're expecting the bulk of this growth to come? Some more color on top line growth and the scale that you're looking to take the business to. Mr. Subramanian?
So,
yeah.
okay.
Yeah, Kelly, yeah, can talk.
Or Mr. Bicha, either one.
In terms of the growth momentum, maybe I'll take it, maybe KB can add further on that. In terms of the growth momentum, we all know about the whole industry. Specifically in terms of sectors, we are well spread across. We are widely spread across in terms of clean energy, industrial, mobility. And what we are seeing is our existing customers are growing. Over and above that, clean energy is where our biggest growth momentum and kicker is coming from, and that's where our substantial growth will coming from. And as you know, green energy is an emerging sector, and there is a lot of activity in that, and we are excited to be part of it. So that will is where most of the growth will. This will be over and above the existing customer we are growing. The difference is the clean energy will be growing much faster than the rest of it, and that's where we see bulk of the growth coming from.
Mr. Bicha, your order book as of November of 2022.
Solar, hydrogen, and EVs. Yeah.
Okay, solar, hydrogen, and
EVs. Electric vehicle.
Got that. Got it. Mr. Bicha, your order book as of November 2022 was 1,190 crore rupees. What's roughly the quarterly addition to your order book?
That's correct.
How many orders do you get on a quarterly basis?
So we've added. So we are getting covered for more or less 0.9 to 100% of our orders for the following year. Apart from that, we have contracts also, multi-year contracts, which we don't add on our order book. So what is executable in the next 12 to 14 months is what we add in our order book. And we are very comfortably placed for the future.
No, what's the quarterly addition to your order book? How many orders do you win on an average?
You want to answer that?
Yeah, in terms of the customers, there are some exciting customers we are talking about, and as you know, in a B2B space, the customer addition does take time in terms of coming in prototype, and then they slowly ramp up. So we are having some exciting pipeline. Over and above that, the order book in terms of the hard orders is what our MD did talk about it. So don't want to get into specific numbers in terms of the quarterly order book addition. What we have disclosed is what we should be 1190 or 1200 crore. And as our MD said, we are pretty much covered for the year. But the excitement is in terms of the pipeline, which we are seeing a significant interest. And we are working on converting these pipelines as we move forward.
Mr. Subramanian, I'm looking at the operating cash flows. Our colleagues point out that they have actually been declining over the years. You were at 66 crores in FY20. Now there's a negative 1.5, if I'm seeing the right numbers. Why is that? What are your working capital cycles like? What is the operating cash flow picture? What can investors expect in, let's say, in this year?
Yeah. So in terms of the operating cash flow, what you talked about in the short term is true. We are having a significant increase in inventory. That's an industry-wide problem in terms of the component shortage, which started with COVID and continuing. But what we are seeing is the early signs of easing off the component shortage. As we move forward, we will see the inventory coming down. Today is about 150 days of inventory, but as we move along, it should go back to the steady state, which is about 90 to 120 days, and that's our working capital cycle. Net working capital cycle is about 90 to 120, and hopefully 1 year down the line, our endeavor is to reach there, and we are seeing early signs of that.
So when things normalize, then what kind of operating cash levels do you intend to sort of work on?
Yeah, our operating cash flow is about 50% EBITDA. What we can target to reach in the long run, but that's in terms of steady state. Today, our focus is on ensuring the pipeline is fully executed in terms of what we move along, and also working on endeavors to reduce the inventory, which with the component shortage easing, I think we are getting comfortable with that.
Mr. Bicha, just allow me to ask one more question. It kind of stayed in the mind when you mentioned this earlier, that you don't have any private equity investment and you directly come to the public markets. I'm just curious, a company that's operating in clean energy in a lot of these spaces, which are very promising, and there's a lot of interest in them. Did you not consider the private equity option at all? If yes, no, maybe, I mean, just thoughts behind it. Why public markets straight away? Why didn't you look out for institutional or private equity investors?
2 or 3 years, So 2 or 3 years back, we did consider some of that, and then COVID happened. Today, we see phenomenal amount of growth, and we feel that, spreading our risk for the growth is a lot better. We did have a look at it pre-COVID.
Mr. Subramanian, when do you think you can achieve 100% capacity utilization?
Company we can never, what we can hope for is about 85%, and after that we will start adding capacity, because when customer walks into the facilities, they would like to see some idle capacity so that they can come in. So our, we will aim for reaching about 85%, but then we'll keep adding. But very important point is that we are fairly capital light business in terms of model. So we'll continue to maintain that part. So today we are about 60 to 65%. We will grow with this order pipeline. Probably down the year we should reach about 80-85, and then we'll start adding capacities. But we are well covered on the land and building, which is the long lead item, and the equipments and other capacities will add as we go along. They are typically 3 to 6 months in terms of the lead time, so we are pretty comfortable on that.
Okay, quick final question, Mr. Subramanian. I think a part of the IPO proceeds will also be used to retire debt. How much debt will you pay down, and what is the debt equity level that you will be at, let's say by the end of the current fiscal, end of FY24?
Yeah. As per the RHP, about 145 crores of debt will be paid down of thing. Today it's about 300 crores net debt. So it should come down technically about 50%. Okay. Moving forward, our long run target is to keep a debt equity ratio of 1:1. Over and above that, we will be having some more free cash flows coming in terms
what is the level right now? Mr. Subramanian, sorry. Just to understand, you said long-term target is to bring debt equity down to 1:1. Where is it today?
Today leverage is much more, so idea is, again, which is more in the short term, not in the long term. Out of 300 crores, it's about 230 crores is the working capital or short term debt, and the balance is about long term debt. This is again spread across all our subsidiaries. US also has debt, and most of our debt is in dollar. So our endeavor is to bring down the debt but maintain the working capital lines and then do that.
No, absolutely understood. I was just looking at the debt equity ratio just for comparison. It will come down to 1:1 versus what is it today?
Yeah. Today is about northwards of 3 plus. With the equity coming in, that should also come down as well. Yeah.
Sure.
Because immediately once you raise the money, so it will come down.
Absolutely.
Well. Yeah.
Got that. Thank you very much, gentlemen, for joining in and giving us a lot of perspective and details on the business. And we look forward to chatting with you again to understand how things shape up. Well, that's the new kid on the block. Avalon Technologies off to a bit of a quiet start, 4.5% on the lower side. Well, on that note, I think